Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today we're diving into Apimeds Pharmaceuticals US Inc.'s annual report amendment. It's a bit like finding out your doctor forgot to check something important during your yearly physical. We'll see what they missed and what it means for the company. Apimeds is basically saying, oops, we made a mistake in our initial report. The error is related to the company's internal controls and procedures, basically how well they keep track of their own work. They're filing this amended report, this corrected version, to fix it. Let's see what went wrong. So this isn't the original annual report, it's an amendment, a correction. They're labeling it Form 10KS, which means they're fixing something they already filed. And the period we're looking at is the year that ended December 31, 2024. Apimeds Pharmaceuticals US Inc. That's the company we're taking a look at today. They're based in Hopewell, New Jersey. It seems like they're pretty new to the public market because they say there was no established public market for their stock as of June of 2024. Now, the company is upfront saying they are filing this to fix some disclosure problems in their original report, especially in something called controls and procedures. This has to do with how well they manage and report information. It sounds like they found some weaknesses. Okay, here's where it gets interesting. This section is all about the company's disclosure controls and procedures. These are the systems and checks they have in place to make sure the information they report is accurate and on time. Oh, the key takeaway. Apimeds' Chief Executive Officer and Chief Financial Officer are saying that their disclosure controls and procedures were not effective as of the end of 2024. In other words, they didn't have enough confidence in their ability to get the right information at the right time. That is a big deal because the CEO and CFO are the top people in charge of managing risk. Next up is management's own assessment of their internal controls. Internal control over financial reporting, that's a fancy way of saying how the company makes sure its financial statements are reliable. It's about making sure the numbers are right and that no funny business is going on. They admit they found material weaknesses. A material weakness is a significant problem in a company's internal controls. It means there's a real risk that mistakes could slip through the cracks and end up in the financial reports. These mistakes might not be caught in time and could affect the accuracy of the financial statements. The material weakness that they found is they don't have enough documented procedures or control activities to support a reliable financial reporting process. They even mention an absence of controls over things like reviewing journal entries, separating duties, doing reconciliations. These are all basic accounting practices. Not having those controls is a major red flag. They claim that nothing has changed, but that seems weird given that they just admitted their controls are a mess. I guess they mean no new problems arose. The company says it may make changes to fix things. That's good, but it raises the question of why these weaknesses weren't addressed earlier. The document ends with signatures from the CEO. This basically says they stand behind everything in the report, even the parts where they admit things aren't working so well. And now let's zoom out and think about what all this means. Apimeds is admitting it has significant problems with its internal controls. This is not just some minor paperwork issue. This goes to the heart of whether investors can trust the numbers the company is putting out. While they have been in business for some time, internal controls are not something that a company wants to fail on. The fact that the CEO and CFO are willing to sign off on this admission shows they're taking the issue seriously, but it also raises a lot of questions. Why were these weaknesses not caught sooner? What other problems might be lurking beneath the surface? For potential investors, this report should be a major warning sign. It doesn't necessarily mean the company is doomed, but it does mean you need to do your homework before putting any money into Apimeds. Understand the company's plans to fix these control weaknesses and keep a close eye on their progress. For existing shareholders, it might be time to ask some tough questions of management. What steps are they taking to get their house in order? How will they prevent these kinds of problems from happening again? Ultimately, Apimeds' future depends on its ability to fix these internal control issues and regain the trust of investors. It's a story worth watching. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment and subscribe. It helps us keep decoding the corporate world.